all that's going on here with the markets, again, a lot of volatility. I'm getting a lot more questions lately. It's like, oh man, this market's just not really doing much. It's just, kind of all over the place. It's weighing on me. If it's weighing on you, you've got too much risk in your portfolio. And let's talk about what you need to know before the bell. Markets again, yesterday had a nice rally. Got back, we had broken on Monday. We had broken support at the 50 and the 20-day moving average. So that was kind of an alert. And I said, hey, don't do anything on Monday, was our Monday's advice. Just go play golf, go fish, go do something else. Just turn off the media for the day. And the market opened well below those moving averages, but rallied back up and closed right at the 50-day moving average. Yesterday, we rallied above that, got above those resistance levels. The 20-day moving average is about to bullishly cross above the 50-day. So that's suggesting that the market is still trending and we're still doing fine here in terms of a perspective. Money flows are still coming into the markets fairly well. Now this morning, we're going to open back down, close to the 50-day moving average support. So markets need to hold today right around that 50-day moving average. We need to hold that support if markets are going to continue to try to push up. Now this rally yesterday, we were very close to triggering a MACD sell signal. Now, we may do that today. If the market closes lower today, we're likely going to trigger a MACD sell signal from a kind of a middle-ish level. So there's not a lot of downward pressure in the markets from here. But yesterday, this rally kind of kept us above that cross at this moment. So again, we're still kind of on a bullish buy signal right now, but just flirting with it. I mean, it's very close. And we're about halfway through reversing that overbought condition that we had following that post-inauguration rally from the market. So all that's going on here with the markets, again, a lot of volatility. I'm getting a lot more questions lately. It's like, oh man, this market's just not really doing much. It's just, kind of all over the place. It's weighing on me. If it's weighing on you, you've got too much risk in your portfolio. So this is when we go back to talking about rebalancing risk, reducing allocations, make changes as needed. Some stocks are working this year, some stocks aren't, so maybe revisit kind of what you own and why, rebalance those positions as needed. But again, we're just working through right now this whole consolidation that's been going on now for the last couple of months. It's been this sideways grind for 2 months now. Market really hasn't gone anywhere. Lots of ups, lots of downs, exhilarance, exuberation, depression. So, we get all wrapped up into these day-to-day movements, and this is why it's important just to step away, turn off the media, go do something else, let the portfolio just kind of work and do it. If you've built it right and it's diversified correctly, this shouldn't be hurting you too much. It should just be, just kind of grinding along sideways with the markets. No big gains, no huge losses, you should be okay. But again, just kind of moderate this. Again, if we go through a sell signal here, which isn't going to be surprising, if we do that, February tends to be a weaker month anyway. We potentially get a correction that brings the market step back down 3-4%. That'll probably line up to provide you a decent buying opportunity if that happens. So again, we just have to kind of work through that. We're still in the midst of earnings season, still grinding our way through that right now. We've got about another week of this before we have the majority of S&P 500 companies have reported. Then the buyback window opens up about mid-month. So around the middle of February, most of the corporate stock buybacks will be back in action for the market. So that'll help provide some support as we get into March and April and start heading into kind of the end of the seasonally strong period. Now, outside of that, one thing we're paying attention to, and again, this is all going to relate back to what's going on with President Trump, is paying attention to the dollar, because the dollar is a function of monetary tightness or monetary looseness. And so the dollar has been weakening here lately. That's what's helping provide some support to the markets here near term. So if the dollar does continue to weaken, that should help provide some monetary easing for the markets and help lift stock, keep a little bit of a bid underneath stock. So keep a watch on the dollar. Tells you a lot about what's going on right now. And again, this is all kind of coming back to this whole trade and tariff and what's balancing those currencies with other countries like Canada, China, Mexico, etc. The dollar is going to really kind of be your lead indicator here to watch, at least for the next couple of months. That's what you need to know before the bell this morning.